we don't deliver financial returns, we don't have a right to exist. And we will get killed if we didn't provide these returns.
When we give an opportunity for a fintech to come and embed itself within the bank's big ecosystem, we're learning new things from them. On the corporate side, using AI and using digital assets, things like risk management, compliance and all, I think those are the areas which are future investment areas for us, which are pain points currently, and that's where our focus is going to be going forward.
Fintech, the IP is all you have. So giving it away obviously is a non-starter. So there's an element of, if we're going to partner, your IP is your IP, my IP is mine, and what we build together is our IP.
Today, we're exploring the world of corporate venture capital with Neeraj Makin from Emirates NBD and Alex Manson from SC Ventures. Let's talk strategy, returns, and everything in between. So indeed, the little story is actually, I'm sitting down and I'm very grateful with two of my favorite bankers, and I'm not just saying that to stroke your egos, but yes, I actually remember you all the way from my first Cybos, which was Geneva 2016, and you were talking at that time about corporate ecosystems and serving the entire ecosystem, the suppliers, not just the corporate itself. And so I was wondering, Alex, maybe to kick us off, how have you sort of taken that approach with fintech and with VC? Obviously, SC Ventures is a big name. We all know it. How has that sort of shaped your strategy and your thinking?
Well, thank you. First, you're remembering really well, and it's an important thought. That was quite a seminal story. The point, back 2016, these years, was within the bank. We were trying to do a few things for our customers. Our customers were telling us, bank my ecosystem. It's me, but it's also my suppliers, it's my distributors, it's my ecosystem of companies that nobody is really addressing. And so we call this banking the ecosystem, and we set out to onboard a lot of these companies within the bank, and really doing this with data and integrating data and financial services and physical flows and all this within a supply chain. And it worked, technologically speaking, and it failed to scale. It failed to scale within a large bank. And I think we understand why it failed. It failed not so much because of technology, although there was an element of legacy technology, but it failed because of the setup of a traditional corporate organization, including not limited to a bank, and the fact that we were trying to do things fundamentally differently. And so it is on the back of that, I'll call it a failure to really scale and do what I thought it should be, that we ended up pitching to ourselves the idea of starting again outside the bank, backed by a bank, but starting again and building a venture that would do exactly what we were trying to do for our clients. That venture pivoted at least 5 times, and but it was one of the first ventures alongside the digital bank in Hong Kong and banking as a service, Audax, which we started relatively early as well. It was one of the very first ventures and formed the genesis of SC Ventures. So meaning our ventures emanated from our recognition that within the bank, clients were asking us to do things, serve them in a certain way, and we weren't quite able to do it. Not that we weren't willing to do it, but we weren't quite able to do it because of the setup and because of the way things were done traditionally, and so we had to do it again. And that's the genesis of Ventures.
That's the genesis of SC Ventures. No, that's an amazing story. I love it. Neeraj, maybe moving over to you, right? I know you are the biggest proponent of investing in fintech, talking to fintechs. Obviously, you take care of huge M&A transactions at the bank as well, Denise Bank, right? A massive success. And you carry that flag internally for the Corporate Venture Fund, $100 million. What sort of drives your passion and your rationale for Emirates NBD to have that CVC?
Again, like what Alex mentioned, I think we realized, so I was part of the digital transformation of the bank, right? I was working through at that point of time to see how we can get the bank to digitize more and more. And while we were looking at that, we realized that we need to transform our technology first, right? Now, we were in a good space as Emirates NBD, as a much smaller bank than large banks like Stanchart or Citi, that we could go ahead and spend that billion dirhams or more in that period of 2.5 years and change our core banking systems and our architecture. Now, once we had done that and we created the new data layer, the point came that we have everything but how are we going to use this now? How are we going to use? And around the same time, we started trying to partner with fintechs and all. And I saw, again, the same point which you were saying, the way the organization was set up, there was resistance. There was resistance internally from the organization to collaborate with fintechs, but also from the fintech side, our attitude was give us the technology. Right?
Yep.
Because we didn't want, and there was a thing, give us the technology and we'll use it. But the fintech said, no, we don't want to give the technology, just we want to partner with you so that we can grow, so that we can create a bit. And the only way I thought about was that, look, if we start co-investing them, if we have our growth in that journey of that fintech, so we are equally invested with them for them to grow, I think there would be a win-win scenario for both the parties involved out here. So I initially tried it in 2018 and 19, but I think it was too early for me to try to set up a fintech-focused venture fund. But come 2021, early 2022, I think as our tech infrastructure kept on and the partnerships with fintech started becoming more plausible and we saw that we can start doing, I think that's when the management and the board agreed that, look, this is probably the right time for us to go through. So early 2023, we got the thumbs up to set up this fund. And for me, it was very important that, look, when we give an opportunity for a fintech to come and embed itself within the bank's big ecosystem, being able to take its products and services into a wider market or a customer, segment, which is all there, we're giving them a favor, but also we're learning new things from them. But in that process, as they grow and as they, widen their horizons, we can partake in that growth by being invested in them and giving them the right, sometimes advice, the support which is needed. So for me, that was a very important kind of mixing point between the two, the banking sector and the fintechs.
No, that makes a lot of sense. And actually, we're going to be publishing a report later today about all of the integrations that we've done. And surprisingly, we've done over 10 integrations, and there's probably many more that I'm not aware of, but we've done over 10 fintech integrations through the fintech team across the bank, with impact on end customers, but also us as a consumer of the financial technology.
I think Neeraj's point, if I can just build on it,
Please.
is spot on, right? It's I can bring it to life because you're just touching on the fact that the expectations of a fintech and of a large corporations may or may not be aligned, but oftentimes the agenda is very different.
Yeah.
Corporate lawyer is going to be trained in protecting IP, erecting barriers. You're either in or out. When you're in fintech, the IP is all you have.
Yeah.
And so giving it away obviously is a non-starter. So there's an element of, if we're going to partner, your IP is your IP, my IP is mine, and what we build together is our IP.
Yeah.
And it's a completely different mindset in terms of dealing with them. And I talk about empathy. In fact, we wrote a book. It's Nothing Venture, Nothing Gain. We have a whole chapter on this, which I hope is helpful because these things are very counterintuitive for corporate organization. The idea of empathy doesn't mean being nice at all times. It means understanding the other party's position, where they're coming from, and coming up with a win-win, as you said, in that context, as opposed to your own, your own context and position.
Absolutely. And if we take that win-win, right? Would you have an example of what would be one of the most successful ventures in your portfolio where you saw that empathy, you saw that journey, and ultimately delivered business impact?
So putting things in perspective, we're predominantly a builder, and we deploy capital in the partners that we work with. So the majority of our portfolio are ventures that we built, and then in the context of building, we end up sort of meeting technology partners or distribution partners or commercial partners, any kind. And we have the ability, sometimes it makes sense, sometimes it doesn't, but we have the ability to deploy capital and align incentives in this particular way. So we have numerous examples of great companies that we've partnered with, some of which have actually sold themselves or exited. So I'm thinking of Metaco initially, was a critical technology provider inside Zodiac custody, now acquired by Ripple. I'm thinking of Thought Machine as a core banking system provider, which is an integral part of Mox, the digital bank which we built, and then Trust in Singapore. Again, great partners. We've worked with Silent 8 in the context of financial crime compliance. We've worked with Instabase. We've worked with, all of these are partners we ended up working with, and by the way, I'm not doing justice to them all, but just rattling through a few names that jump to mind. But the point is they're partners in the context of what we're doing, as opposed to just name a portfolio company, something we invest in, and hope that by magical sort of osmosis, we'll learn a lot of things, which is typically not how things pan out.
Yeah, and that's very much aligned with your thinking, right, Neeraj, in terms of how the CVC operates in it.
Yes, for the CVC, I think it's not just that we go and we see something and we invest the money and then leave the fintech or the venture to do something on their own. The key aspect is that there has to be a strategic element for that. And that strategic element is that somewhere in the organization, a business or a support unit actually is invested in using the technology or the platform or entering a new market or a new product service, which we're going to use, right? So then you are equally invested in making sure that the venture is successful. You open your client sets to them so that they can grow. So until unless you don't have that sort of understanding and that sort of common objectives, you won't find that success factors coming through. So it's very important for us when we look into any sort of investments that there is a strategic link which is out there, and there is an owner within the organization which is going to take. So if you see some of the investments which we have done in our CVC, we've made sure that someone from the trade finance side, and we made sure that there is a representation of that person either on the advisory board or on the board of that company, which basically puts the right kind of incentives and the right kind of KPIs for both the parties to make sure that that product is embedded within our ecosystem and the market is opened up for that fintech, without this thing. And we are new kid on the block, unlike SC Ventures. But there's a slight difference how Stanchart has gone about and what we have not done is we've not taken the approach of what Stanchart Ventures has done is of building. Here, a lot of the companies are homegrown companies which are coming up where they've invested in people, they've invested in ideas and build that up. We've gone a little bit different route, and I think that's the difference between the scale of the two banks, is that we've gone ahead and we've tied with likes of Stanchart Ventures, Santander, City Ventures and all. And we've said, look, we will look at your pipelines, we'll see what is applicable to us in the regions we operate in the markets we operate in. And if there is a commonality, let's co-invest with you, or we'll find stuff on our own, which works like what we've seen we've done with a few local startups out here. We've done about 3 or 4 in the region out here of our 10. And those sort of, are the homegrowns. And some of them, of course, we are looking with Stanchart Ventures also to see how we can. And I think bringing other organizations together, it's not only that you keep what you have to yourself as Emirates NBD. For that venture to be successful, for the technology or platform to become more acceptable and more usable, you need to bring other organizations, other banks around. And that kind of enhances the market.
Yeah, and you've got the example with Zodia Custody, right? And
yes.
Custody, APRO, others, and
APRO, exactly.
So
So
there's
there's
a
a
great
lot of
example
overlap.
where, as an investor, you wear a very different hat, which is you want that venture to be successful, and in order to be successful, while you may think of another bank as your arch competitor, they become your partner potentially, and that's a good thing for all involved, and it takes the cost further. To your point, Neeraj, I think the distinction at times between building, co-creating, co-building, JVing, and supporting from the very early stage. Sometimes that distinction can be a little blurred, and obviously we have to navigate these things. I think the commonality between the two approaches, and in that sense, I think you're spot on. As a corporate, you really should not invest unless you're a user, unless you're an adopter. That is our edge in terms of understanding what a company is all about, what the technology is all about, what people inside the company are all about. There's no way a corporate, as sophisticated as a big bank might be, there's no way a corporate has the same information flow as a large VC. Sequoia, A16C, a great job. We're not competing there.
Yeah.
Our competitive edge is we have a sense for what the company is doing that nobody has, because we're user, because we're big, because we live with that technology and we build on the back of it, and that is the context in which deploying capital makes sense.
Yeah,
right?
yeah. And in terms of partnership with other organizations, another example we did was with Newbridge here in UAE, right? That was a startup that was literally seed funding. But one of the things what we did was we said, in order for this to succeed, there are other banks which have to adopt this, because we alone supporting a startup and nobody else using it, it just won't take it anywhere. So we then worked with 2-3 other banks in the region to see if we can onboard them, and we successfully were able to bring Mashreq in, so at least 2 banks. But while we were having conversations from co-investment, at least 2 other banks, without deciding to do investment, but they decided to sign up as a user for that fintech. And that's how you start creating value and start giving that thing.
That's really funny, because it reminds me of my Swift days, when you had, the largest competitors in the world around a table trying to find, mutual solutions and trying to solve these problems. And now you can see it from an investment angle. Actually, the same sort of philosophy arises. We're better off in some areas, not all, to collaborate, right? And it's sort of a co-opetition scenario. So maybe on that, talking about the traditional side of the bank and running the business, you've got sort of yearly targets, all of that stuff. How do you balance this financial returns and these KPIs versus sort of the work that you do that is often more long-term, right, in a CVC, right? It's not like you're going to invest in a Medico and a Zodia and then in 12 months you're going to be seeing, bottom line impact. How do you handle that sort of with your other execs? How does that conversation arise? I don't know which one wants to take that one first. Alex?
Start. First, it's interesting for me to hear that we've been around for a long time and we're advanced. We're 7.5 years old, and so I think of ourselves as a baby building babies. Think of the investment cycle in VC being 7 to 10 years. The building cycle is really 10 to 15 years. So meaning we're still at the early stages of the journey. So to your question on financial returns, I think it's non-negotiable. We don't deliver financial returns. We don't have a right to exist, and we will get killed if we didn't provide these returns. When asked, is it financial returns or is it strategic? The answer is, well, I don't choose. Operating constraint is returning the cost of capital and beyond. And within that operating constraint, we are going to do things that are transformational and useful and help us serve clients the way they want to be served, and we're going to build great companies and all this. So the themes we address are one thing. Are we the right people for it? Do we have a competitive edge doing it? Does it play to what we're trying to do, which is ultimately rewiring the DNA in banking and financial services and all that? But operating constraint, no way we can do this in the long run without the right returns. You made another point, which is short term versus long term. That is an element we need to navigate, and then at times when building ventures and consolidating the accounts, there's also an element of financial returns, which is really what we're solving for, and also the operating P&L of a venture, which we need somehow to incorporate into a corporate plan. And so that implies creating the capacity for it and being very clear on what the constraints are and the targets and all this.
Interesting. Neeraj, do we have the same view at ENBD, or how do we look at these things?
So I think it has to be similar. When the board gave us $100 million, it wasn't that's free money, go and blow it up, and we won't ask you any questions. No, I have to quarterly go back and kind of tell them how things are moving along. But I would say that financial return is not the only objective out here. We set our fund up and there were 2 objectives. There were the strategic objective and alongside the financial objective, that with the strategic objective, you're going to create certain value for the bank while doing so. So strategic objectives are, I would say, very important. The good thing what we have is we don't have a pressure like a traditional VC that I have a time frame to start returning money back to the investor. It's sort of an evergreen sort of a fund.
Very important.
So the patience levels for the returns to come are going to be much higher. And there is no interim sort of pressure on you that somebody wants to take the money out and you have to have certain liquidity and all and everything. So I think running a CVC, that bit of complexity doesn't exist for you. But as far as evaluating how successful you have been, yes, you have to show actual financial return. But I think so alongside that, what we have done is we look at some strategic KPIs also. And the thing is that and we haven't yet developed it again. Alex talked about that they are 7.5 years old. We are barely 2 years old. So we've got a long way to go, right, to kind of come there. But the way we've been thinking about it is that we need to create, and we are working on that, to have a certain set of strategic KPIs that in case a venture we invested in, but we started using its product and technology, and that product and technology gave us a lot of benefit on our day-to-day business, on the product or the segment side. Then is there a way that we can measure that and show that, okay, that was a alternate value created. I may not have created hard dollar value out here, but the technology. Now, there are 2-3 different kind of scenarios which could come up. One, that fintech is hugely successful because the technology is great. You've partnered with 5 other banks and it goes and it becomes a $300, $400, $500 million valuation. You made your money. You've also got some strategic uplift from it because you've been able to fine-tune a process. You'll be able to re-engineer or create a new customer journey which has created value for you within the bank. So you've got 2 value pools which is out there. There could be a scenario where the fintech itself hasn't been widely successful, but what technology or platform it developed was really useful for you as a bank. So you may not see the hard dollar value being created, but that technology you've been. And again, that benefit of investment out there, that if in case that fintech is going down or is not able to do, you then have that ability to either buy it out and integrate into the corporate, or maybe give it a lifeline for it to kind of try more, because that technology or that platform is very important for you because it's working very well strategically from your day-to-day operations perspective. So I think that's the benefit, and that's the way we try to look at as to how we measure success.
Awesome. And I know we're short on time because, Alex, we've got a busy schedule, Neeraj as well. So maybe we'll go a little bit forward-looking for sort of the last question. So what sectors or what regions are you really excited about looking at 2025 and beyond? Maybe we'll start with you, Alex.
Sorry. Well, regionally, I'm very excited about the Middle East. Right, generally speaking, we've been building an ecosystem of ventures across the GCC, focusing on the UAE really, and or at least initially on the UAE, and we've gone from 2 very small nascent ventures, which are now growing and doing very well, to 7 businesses, soon to be 8, and really set up a proper presence, and this is, in my mind, because the environment, I see nation building, and nation building is going to lead to dynamism, a momentum, and a willingness to do, the willingness to build, which really lends itself to building new ventures, new companies, and so I perceive this to be one of the hot spots on the planet for venture building. In terms of the themes, it's interesting that the themes haven't changed a whole lot for the last 7 years. We've been focusing on clients. We've been focusing on solving clients' problems. On the retail side, it's digital banking, lifestyle, integrating financial services into people's lifestyles. On the corporate side, it's about trade, supply chain, corporates, SMEs, and then digital assets, infrastructure, which in my mind converges with both other teams, because ultimately we'll be running financial services on very different rails from the one they're on today. And all the other things that people talk about are incredibly relevant, from adopting AI to sustainability to financial inclusion. But I think that they're an integral part of the things I've just described. So we're sticking to these themes because they're continuing to be relevant to clients and societies where we operate. What I think is evolving in our approach is, having built a few ventures and having a few partners, partnerships in the form of JVs, investments, minority investments, or otherwise, we have within every theme an ecosystem of ventures, and the bank that backs us and other banks we work with and partner with. And that ecosystem is incredibly powerful. In other words, while a venture has to make commercial sense in its own right, when plugged with the rest of the ecosystem, including and not limited to the bank, it becomes an even more powerful proposition, and we can assemble the bits and pieces of value chain. I call it ecosystem is an overused word, but an ecosystem to serve clients in a more comprehensive way. And I think this is where we are focusing a lot of energy right now.
What about you, Neeraj? So we're in the right spot, right?
Yeah,
Nation
yeah.
building's happening here.
That's there. So like we are at the forefront of that. Like we've been doing a lot for the fintech world out here, and I think the fintech investment space in Middle East is growing very fast, right? In fact, within UAE, if I look at in the Middle East, within UAE, it attracts more than 40-50% of the investment which goes into venture capital or startups out here. So that's a very big thing. And the government here also has been focusing a lot in bringing in talent, in providing the infrastructure and the platform for things to happen, with governments itself spending a lot of time. In terms of themes, what we are looking at, I think pretty much similar, right? On the retail side, it's more about how we can ease the customer journeys, how we can bring more value to our customers, bring them more closer to the bank and provide that stickiness. Like, the client just feels, oh, it's so easy that I just don't want to go to another bank. Then on the other side, on the corporate banking side or on the treasury side, it's all about getting that technology to kind of ease that pain from the corporate's perspective. And again, it's a customer journey out there, bringing some technology which makes things completely STP, where there's no manual inputs involved, and bringing the cycle of getting a transaction done on a seamless and a much faster basis. And then, of course, the digital assets, which is what we have partnered with Stanchart Ventures out here. That is, again, one of the key things. And in my view, going forward, the focus is going to be a lot more on digital assets, AI, and digital transaction banking. I think these are the three areas. I think on retail, a lot has been done. We are reaching a thing where what you could think of has been done. Gen AI is going to make a huge impact in customer service side and all and everything. But I think so on the corporate side, using AI and using digital assets, things like risk management, compliance and all, I think those are the areas which are future investment areas for us, which are pain points currently, and that's where our focus is going to be going forward.
That's awesome, gentlemen. So same problem sets, new technologies, but we're still looking at serving the customer on the retail side and the corporate side, solving their problems. I think that's the right focus. I want to thank you. This was awesome, an awesome conversation with two of my favorite bankers. I know last time I say that. Have a great day. Thank you for having me.
Thank you.
Thank
Bill.
you.
Thank you.
Thank you.